Okay, hey guys, before I get into this video here where I'm going to recap the week and refer back to some of the content I produced earlier in the week with a focus on multi-time frame analysis via the market structure indicator. And today I'm going to emphasize some of the tools that are built into our toolbar here that I think kind of the theme I've had going this week, underappreciated tools or indicators in our repertoire. Before I get into that, just a note here to any of you that are in our Discord. This little promo we've got coming up for the end of the week. So this will be a one-day flash sale. This is happening this Friday here, where we're going to take 40% off of everything, one-day flash sale, everything with the exception of Algo Studio Pro and the bundles because they are already discounted. So that said, of the, I think we have 77 indicators now, the vast majority of them will be at this discounted price for kind of this flash sale idea. And then this week you can also look for a few emails from us referencing an Algo Studio Pro webinar that's coming up very shortly. We're making some really interesting progress with that product as we integrate AI into it. So I think you're going to be very psyched when you see that. But in the meantime, right, it says we're going to focus on tools here that I think will be very appealing to you, those that look for objective ways to analyze the market and to base your entries off of those. 40% off is, that's about as aggressive as we ever get. But now, key points here. This is available only to Discord members. Right now, of course, our Discord is free to enter. Right? So all you have to do is just jump in the Discord to get access to this. You're going to use this discount code. But if you're not in our Discord, in our discount, that won't work for you. Right? So pop into the Discord, take a poke around. Reminder, of course, everything, as you well know, all of our indicators available for a 7-day trial. This might be a good week to maybe trial a few things and say, boy, I do like this, right? And on Friday, I'm going to get 40% off. Something to keep in mind. Okay, with that, let's get into the video. Okay, hey guys, Sam here, back with another video here. I'm going to do a bit of a recap here on the week with an emphasis on the two indicators that I had highlighted earlier in the week and just see how things played out. A lot of volatility this week, as we all experienced. And then kind of stay with this theme here that I've been offering to you, which is, for lack of a better way to describe it, it's kind of revisiting some indicators that I think are, well, for lack of a better way to describe it, just underappreciated. I'm not sure you realize how much value these can offer and the positive impact they can have on your trading. So with that said, I did this I think on Monday or Tuesday of this week. We were focused on emphasizing the importance of higher time frame when working with a market structure indicator, as you see ours here applied to a 4-hour chart of the MES. Now, a lot of volatility this week, so it's not a bad thought to be working with the micros this week. It's never, particularly for you prop traders, which is apparently all of you. Micros are not for pussies, right? Micros are for people who respect how quickly the market can take and how reluctantly it gives. Certainly with many of the prop firms where it's a trailing drawdown, you've got to really be careful about that trailing drawdown biting you in the ass, right? That's how they make their money, right? Just there's no free money. Okay, so all of that said here, let's get back to the point here. Now on the chart here, as I always do, right, I have our toolbar here, and I'm going to kind of tease you a little bit with some of the benefit here that I think, again, it's just underappreciated. Of course, the market structure indicators applied here. I do have, I have a few things on here which we'll tap a little bit. And then I have our auto fibs here. I don't think I have measured move on here, but auto fibs are over here already. I'm always going to encourage you to consider that. If you don't use a tool like this, we strongly encourage you to draw them yourself. Okay, so as we can see here, if you look at it now as we sit here after Friday, well, we can look here and say, okay, well, the 4-hour trend is up. Now, one thing you'll note here, if we look at this, right, and I've got these highlighted blue, and then there's a strong magenta if we get a bearish market structure shift. Well, if I go back, again, the point here is we can be objective, right? That's always what we're trying to do. How can we make objective decisions about the directional bias without getting caught up in some of the emotional hunches, that type of thing? How can we be as objective as we possibly can be? So I'm going back all the way to this July low here. I think I've got, I don't know, 70 days of data. I think there would be no dispute about whether or not we've got an uptrend or not, right? So from this low, now we do get the classic you see it. There's probably 20 million videos on YouTube talking about liquidity sweeps, and here you see just a textbook. It's not that huge, right? They swept enough to grab the stops that were down here and then launch into this, right? So now there's a tendency to say, okay, well, why does this matter over here? Let's just get focused on the hard right edge. But there's always value in going back and kind of trying to understand what can I learn from this. Well, of course, the liquidity sweep here, that's likely not new information. We know that's, particularly out here on the 4-hour where institutions are going to trade, all they're doing is looking for liquidity. That's the only way they can get in the market at the size that they trade. So something like this is just, it's literally right out of, again, 20 million videos, any book you've ever read about how liquidity is grabbed by the larger institutions. I mean, it's just a textbook example, just enough to grab it, and then the reaction is how you know, right? Even if you weren't sure, like, geez, was that a liquidity sweep? It's the displacement, right? It's common language used to describe this, as the market just accelerates away from the low, right? It doesn't hover here, it just rockets off. So it's certainly something to look for. Now, you might look at this and say, well, God damn, if I'm trading, a 3 or 5 lot here of micros, and I'm down on a 1 minute or a 2,000 tick or something, like, how am I going to get into that? Am I just going to see a sweep and just long the market? Well, that's... with micros, perhaps, right? You could take a runner at something like this, but you'd likely want to go down from the 4-hour. Maybe we're going to look at, you maybe go to the 60, then the 15, then my entry template. I tend to work off for entry. I'll use a 2,000 tick. That's just me personally, right? I mean, not that there's any magic to it. It's just it's a close approximation to a 1 minute with a tick chart. That's I think why many will use that. But as we see here, if I just use something like this to draw it, it's the push up and then it's the retrace. That's where you get better probability on this, because we know, despite this massive downtrend here, the retrace into the displacement here, i.e. the fair value gap, right, where we get an imbalance here, which leaves the gap between those two, and even that can be a little scary, right? So you might be looking at that going, oh God, did I get maybe I get a measured move here? Well, if I come here, it's perhaps a front run. Again, we're on a 4-hour, right? You're likely not going to be making those entry decisions here, but certainly can give you your bias. And that's kind of what we're looking for. And you see it happens again. You get multiple opportunities here. We pop and then we retrace again into the fair value gap. And the order block that's sitting there, we put, and when we retrace again. And then we pop and then we retrace again. It's the retrace, right? We would, again, how I was taught and how would always continue to teach anyone looking to implement these indicators with the highest probability. You don't want to chase the move, right? You want to look for the retrace, right? And that's, are we going to go higher high, higher low, higher high, higher low? Now here on the 4-hour, right, again, we can look at this and say, okay, well, based on what I can see here, trend has been up, right? There has been no change. There is not a single bearish break of structure. Now we have change of character, absolutely. And I think last week, if I bring this back to where we were last week, if I'm not mistaken, where's an arrow? Here, we're somewhere right about here. I think that's when I recorded that video. We had not had the change of character yet. The last thing we had was the significant pivot here, which led to that shift in market structure here. This is a break of structure higher. What do we anticipate? Right? Again, I say this week in, week out. Right? Whether we're talking crypto, indexes, equity, it doesn't matter, right? So what do we anticipate? Not what do we know. What do we anticipate after a break of structure? Retrace. Very, very, very consistent. Now, keep in mind, don't get caught up in the semantics of change of character or break of structure. A change of character like this, that is a break of structure. This is a break of structure. Any change of character, you may not get, it's not as significant as a market structure shift or a break of structure. We get a little bit caught up in that language, but it's just another tool to suggest that perhaps the trend is reversing, or at least in the shorter term, as you see right here with this break of structure, we're headed lower. That doesn't change the larger picture, right, of higher high, higher lows. We are still in an uptrend until this low down here breaks, which is a long way off. So as you're looking at that, the change of character here is significant. Now, I have these bars are highlighted here. These are just high volume bars, right? It's just a little, it'd probably be easy to decipher that yourself, but it's just a little bit of an extra little tell here. Okay, very high volume as we're pushing down, right? And we get the Fed on Friday, right? So this is, it's always easy in hindsight to say, oh, okay, well, institutions are pushing it down here. They're waiting for the Fed so they can launch, right? So it's easy to kind of talk yourself into that in hindsight. But let's try and be objective again, which is the goal here. And I'm trying to get there, but it's I've got 8 minutes in. I'm trying to get you to that. But note here, so we are still in an uptrend, right? Trend is up, right? The larger trend did not change at all this week, but the shorter term trend, if we go from a 240 to a 60, you'll see we've had multiple bearish breaks of structure. They come down here and we go to this double. What's the most surprising thing on the week is that we didn't sweep this low. We actually did not break it. It looks like a double, but it's a few ticks off. Didn't get it, unlike this one, which got that liquidity. This is somewhat surprising, right? But the market's full of surprises. Let's go over here to the 60-minute. Now, if you look here, here's the last break of structure up, right? So what do we anticipate after a break of structure? Retrace, right? So here we come down, and here's the first change of character. Here's the first break. We break this pivot, which led to the break of structure, right? Not to get into a whole market structure dissertation, but that's the idea. It's not that this is the only way to do it. There are many people trade market structure successfully with slight variations of this. This is just a very objective way to do it, which is why we've chosen this for the indicator. We get a change of character. If we get another break, then that's the market structure shift. All right? And then we have both internal, the micro, as you see here, a little micro change of character here. That can get overcomplicated, but again, I'm not trying to do a dissertation here on the market structure indicator. I'm just trying to show you how the higher time frames interact and how you can use them to your advantage as we go down to lower time frames. So as we get the break of structure here, then we come down. Now first is change of character, retrace, right? Because that is a structure break. Retrace, structure break, 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 retrace. Right, so it sounds, oh come on, dude, enough of that, right? But you got to kind of let it really sink into your brain. This is how the market moves. So while the market is coming down here, even though we look at the 4 hour and we go, okay, well the trend is still up. If we go over to the 4 hour here, are you with this break here? Don't be so committed to the 4 hour that you're going to ignore what's happening on the 1 hour. Okay, on the 1 hour, well, I can clearly see that we're retracing here. Larger trend still up, but at the 60-minute here, we're going through a retracement, which is offering up opportunities here as the breaks happen, as we get the market structure shifts right here in this magenta color here, just to make sure you can't miss it. Now, a couple of things you'll note here. Where do we find support? Right, again, it's 20 to 50 million videos on YouTube will talk about fair value gaps. Fair value gap, what do? This is a little order block into the order block. How do we know it's a good order block, right? Because we get a fair value gap on the other side of it, right? That's always a bit of a tell. I'm only interested in order blocks that have a fair value gap attached to them. Right, there's one in here, you can't quite see it behind it. There's an order block here, there's an order block here, here's the fair value gap, because that's the tell that it was institutional money. Because retail, well, of course we can't produce a fair value gap. We can't, right? But look what we do. Again, those 20 million videos, they're there for a reason, right? Because you can demonstrate this all day long. Does it make it any easier to pull the trigger here on a 60-minute, right? Are you going to be trading off the 60-minute? Well, probably not. If prop firm traders, probably not. But at least we can come over and say, okay, this is an area of interest. Now, Friday, a news-driven launch like that, right? The market got what it wanted, right? So here's the retrace, right? Then what do we get here? We get a little micro change of character. Then we go into a series of fair value gaps and order blocks here. But this goes so fast and so far. It's very hard it always looks easy after the fact. It's very hard to get involved in that because it's moving so fast. And again, I'm on a 60-minute here. In actual fact, and I'll show this to you at the end of the video here, most of my trades on Friday were shorts. Because once we got up here, right? It was pretty clear that in the price discovery that the market was undertaking here, as it was trying to establish value here, we kind of ran out of steam here. So the little, again, even though the trend is up here, I'm looking at this on the trend being up. Pardon me, on the 4 hour here, trend is down here on the 1 hour. On the 4 hour, we still know the trend. I mean, look, why are you going to, there's no discussion about where the trend is. But if you're in more of a scalper's mindset, the better opportunities were on the short side as the market started to run out of steam here. I'm probably getting ahead of myself here, but with that said, we'll visit that toward the end of the video. I'm trying to watch the clock here, so I'm not just boring you to death. Swing, retrace, lower, high, lower, lower, low. Lower low, lower high, lower low, lower high, lower low, lower high, higher low, lower high, lower low, right? Then launch. Okay, so if I pull this back here, and we're working off of the last sweep low. Now, a couple of things that you can do, and now I'm finally getting to something that I wanted to show you. Built into our toolbar here is a volume profile, but it's particularly useful volume profile because unlike of course, we sell a volume profile indicator, which can be daily, weekly, custom ranges here. What I particularly like about the toolbar version here is that I can draw them very precisely. So just for a large example here, if I go from the low here up to the high here and pop that in. So I get a volume profile on just what I've drawn. Now, again, that's TradingView, other indicators will have that. It's just, it's not available to you with a Ninja, just with the default product. So this is pretty useful because I can look at this and say, again, I can be objective here. So on that whole move up, right? I can look at this and say, well, it's not a questionable event here. 68, well, let's just round it. 70% of the trading volume is here. So this is value. This is fair value here. So if I look at the point of control here, again, on the swing up, this is fair value. So when I'm above the value area here, okay, all right, I'm expensive. So if you think of even in the context of premium discount, right, which is very much part of the language of market structure trading, premium discount, well, okay, I mean, here I get a very objective view of what's premium, what's discount. If I'm above the fair value area, even though I get this very large pocket up here, and you can understand, right, how the market stays up here. If you were using our volume profile indicator and had auto splitting, this might split this very large volume profile here. But I can look at this and say, okay, well, the market is consolidating up here. We've had the push into price discovery here. We reestablish some value. Can it hold? Can it hold? I can look in the range. Am I expensive here? Well, yeah, obviously, right? This would be expensive. Down here, cheap. We don't get into cheap, but I do get a couple of tells here along the way. So as the market is coming down here, I do get to, again, I will often do things like this. Well, here's a high volume node right here that seems to be meaningful. Now, that by itself may not be enough to say, okay, well, I'm going to long it here. But the fact that we are popping into this and we are doubling into the fair value gap here should be a bit of a tell, right? So you can also see the liquidity sweep that happens right here is pretty obvious, right? Hard to miss that. Again, duly noted, quite surprising they don't get that. Very surprising, but there it is, right? So here's the liquidity sweep, and then we come off of that into a straight vertical launch. Just the kind of thing you want to see if you're trying to determine, again, you don't necessarily have to chase this in the futures market. Could be you're off to the SPY to buy some short-term calls or something that would give you the opportunity to participate in this without having to chase the futures market. I mean, there's a number of ways that you could approach this. This is just, I'm kind of giving you some ideas. But the benefit here is that I can look at this swing here very precisely and see where value is. Obviously expensive, right? We don't get any discount here. So then the thinking as this market is coming down, well, we're coming down from an area of a premium pricing, expensive pricing relative to the entire swing that's here, right? From here to here, this is where it's expensive. This is where we're getting back into fair value. Right? We got a couple of high volume nodes, right, which we know institutions would look for. Why? Why would they look for that? Because that's where they can hide their size, right? They can't come in at these very thin locations because they'll move the market too much. So they need these high volume areas here where they can execute the size that they like to play in. 60 minute, 240, those are going to be areas that you would find institutional activity here. So as we come down and you see some of the things that you look for on the checklist. Okay, was there a liquidity sweep? Good. Okay, yes, check. Was there a fair value gap there? Yes, check. Has it been mitigated? Not entirely. Still sits right there. Is there a high volume node there? Yes. Was there fibs there? This is a little shy. A little shy of a clean fib. Oh, pardon me. It doesn't make the, excuse me, I'm thinking of the 4 hour. It doesn't make the golden zone here, but we get a double sweep here at the 50. Now, again, hindsight, oh, how easy, right? I feel you, right? I understand, right? We're just trying to look here and say, okay, well, if it's coming out here, well, where was the opportunity? Well, something else you might consider here is in this downtrend here, I've drawn the volume profile for the uptrend. How about the downtrend? Well, I can do the same thing coming down. As I come down, let's go right to that low. And now I get another value area here. So I can look at this and say, okay, based on what I can see here, knowing, again, just rounding here, 70% of the volume, right, is right here. I can see where most of that, again, on the trend down, right, not relative to this. Here's where fair value was. This is inexpensive here. So this is discount pricing relative to the swing down. So if you're buying down here, at least you have the benefit of looking at this and objectively quantifying. Okay, well, I'm back in value on the value of the upswing. I'm inexpensive relative to the value area in the downtrend. Now, this rockets all the way back up, and where do we go, right? I mean, these are marked because they're significant. This is the order block and the fair value gap just above the value area here. So as the market is trying to reestablish value up here and creating, right, and stabilizing here, okay, that's meaningful. Now we'll go down to the shorter time frame here where you might be looking for entry models here. But right now as it sits, take note here, the trend is down still on the 60 minutes. Why? Because the last thing that happened here is the change of character. I do not yet have a break of structure to the upside to switch that to an uptrend. I've got a bullish change of character here, which is right here, but I don't have a major structure break. Now, if we break this, certainly here, right, then this will flip to bullish. But as it is right now, if you're looking at this relative to this positioning here and where fair value is, are we cheap or expensive here? Well, again, you could do the same thing. Again, trying to emphasize here how useful a tool this is. Well, this has gone so fast that you got just an air pocket here, right? So if we start to come down here, it'll be interesting, right? Because there's nothing here to support it. What we can see again is I get an objective read on where value is, right? I got a point of control here. If here, let's just do it this way so you can see it, right? There's my point of control right here. So the market is trying to reestablish this as a value area, but it's going to need to spend more time here, and we're going to need more trading here for this to sustain as a new value area, right? Right now, it's just short term. Okay, what do we got? 60 minutes. I got the bulk of Friday as we stayed up in this value area here. But if I start to come down, again, it's going to be mighty thin coming down in terms of any potential support unless we stay here and develop a new value area up here. It's just not enough time has passed. Right, so emphasizing a couple of things, all the tools that are in here, but if you don't have a volume profile, or if you find the volume profile of, always on the right edge of everything that you're seeing here, whether it's visible range or weekly or even daily, the precision that this volume profile gives you is very, very useful, and it can really help you. Now, let me go back to the 4 hour here just to show something that's easy to miss, right? This is really easy to miss. I'm gonna sneak in another indicator here. But if you looked at this, your eye might not spot it. And this is our auto trend line indicator. Now, I've got a couple of things here on here and turned off here. Now you see everything I've just drawn here on the 60 minute, how it would relate over here to the 4 hour. Right, I go back and forth between these two all the time because I'm just trying to look for clues, evidence. Let me get rid of this. Now, if you look at that, do you see it? Right off the bat, it's tricky. But if I turn the auto trend line on, boy, all of a sudden you're like, oh God, how could I have missed that? 1, 2, 3, 4, 5, 6. 6 times we hit there. So as you're sitting right here, again, right now, if you didn't know that, or if you missed that, it's like, oh shit, I forgot to check the trend line on the 4. Right? This is the kind of thing that can be very, very helpful to you in terms of, oh god, this is, again, are you on the 4 hour? Are you going to just buy the futures? Maybe on the 4 hour, you're going to go over to the equity market and you're going to buy SPX calls or SPY calls, or just some ideas. Or maybe that's enough to have you go, oh god, I got to pay attention to that. And now I'm going to go down to the 2000 tick and pay attention there. And again, that's when we have a report or an event like the Fed from Jackson Hole launching. In hindsight, this gets obviously very easy, right? Obviously, I can see that. But it may have been a place where you could have, again, let's get out of prop mania for a minute, where you say, okay, well, clearly something's happening here. I've hit this 5-6 times. So the market is respecting this trend line. Okay. Again, just a little hint here that might be something to pay attention to. Now, let me go back to the 1 hour here. I could do the same thing here. Right now, if I turn these on, right, here are those same trend lines again. Now, they're going to be slightly different pivots here, but we see this cluster down here, and that's kind of what you're looking for. Now we start to combine some of this. Okay, so I got the fair value gap. I got the high volume node. I'm in discount relative to the move down. I'm coming out of this where I've got multiple pings and taps of these trend lines here. You start to see, like, boy, you start to put together a picture here. Okay, well, again, knowing that 99% of you are trading with prop firms, let's go quickly down to a 15. Right? This would just be a natural progression. Now you'll note here, I've got the same volume profile that I'm pulling from the toolbar applied here. So I've got this massive move down here. Again, I can see where value is. So I get an objective read as to where value is, where discount is, where premium is. Am I expensive up here above the value area high after that break of structure? Yes. Here's the liquidity sweep down here. So I come up, now I reestablish value. Now this, all I've done is drawn it from here to this pivot right here. So I can look at this and say, well, that's where the value area is. So I can be objective as the market comes back into value. Again, I'm aware we are doing this in high set, right? So you don't need to comment there. So what are we doing right here? So here's the point of control. Again, tapping that may not be just enough to, I'm longing that, but boy, does that make me want to look. It makes me want to look down to something small on a smaller time frame for your whatever. If you're using a 1 minute, 5 minute, 2000 tick, whatever the case may be, whatever you're using for your entry time frame or template. Boy, I sure want to look when that's happening. Oh, I don't have the trend lines on here, but one other thing, right? Again, just kind of teasing you with the volume with the toolbar up here. It will built into in addition to all the swing structure and things and the median lines and pitchforks, things that we can use here. The anchored VWAP is in here. So if I go off of this low, okay, what kind of give me a little bit of a bias. I break down here. Okay, well I could do the same thing over here. So I'm just going to take anchored VWAP from the absolute high here. Can be quite useful, right? As we transition here, now we get on the other side of it, and then do the same thing, right? Anchored VWAP can be an incredibly useful tool. So as we sit here, as we come back down potentially to refill the imbalance here, well, there's anchored VWAP here as well. A lot of really, really useful tools in it here. And again, I'm just going to do this as I was just doing it before. This is from this low through this high. Where am I expensive, right? If I do it here. Where do I get into discounting prices? Right, so I want to be looking down here. Is there other evidence here? I could do the same thing here if I just pull this over. Now we're coming right back to the edge of value of this upswing. You see, there's always a logic that you can see. I know, right? So it's easy after the fact. But the reason to even do a video like this is just to kind of show you, so the next time you see that, at least it might, okay, I've reached a point of interest here. I want to go down to a small, if I'm at 15 now, let's go down to my entry template and see if there's anything here I can work with. Same thing up here. Again, what do we anticipate after break of structure? Not what do we know, what do we anticipate? Retrace. Now this ends up being a change of character, and that's where we saw the switch in the 4 hour from bullish to bearish relative to the changes of character. So I get a change of character here, which leads into this retrace, but it's not enough to change the trend. Then I go back the other direction. Now I've got the change of character up this direction. So 4 hour trend is up after the bullish change of character. What would you anticipate? Now, again, don't get caught in semantics. A change of character is a structure break. This was a significant pivot here that led to new lows. So this is the pivot that broke, come down to the fair value gap. Now I'm coming back the other direction. Okay, so now this is an important pivot because it led to the change of character up. So while traditional, common analysis, again, there'll be 20 million videos here that will on YouTube that will show you this and say, okay, well, in this range here, here's oh, that's a 618, but it's here's halfway. So this is premium, this is discount. Okay, well, that's one way to look at it, but that's, yeah, let me get this off here. In fact, I'm going to do this. Hang with me 1 second here. Okay, I just wanted to get that off the chart here. It could be a little tricky with Ninja. So here's the volume profile, right? Again, I'm just using the volume profile here of the entire move down, and then I've got anchored VWAP on it as well. So here's the point of control. We blow right through it. Come into this order block up here, right, where we get. Now note this, and this hopefully will make sense as to why I was looking for shorts here. Where do we get expensive? Objectively, where do we get expensive? Now, it's downtrend, right? Clearly on a shorter time frame, this is the downtrend. This is the uptrend retracement. Now we go back up here. Now I'm in an uptrend, but no, where do I get expensive up here? Here's value right here. Here's the point of control. I'm a little pricey up here. It's just something to think about, right? So for short-term trading, so you look here and look, okay, well, the 4 hour trend is up. Right, this is on the 15-minute, but I've got multi-time frame on here, so I know the 4 hour trend is still up. I almost don't need to go look at it. I can just look at the chart and see that. But note how all these value areas are giving you additional information that you might not just naturally see, right? So much like the trend line, right? Are you going to see them all? Maybe, maybe not. Are you anchor VWAP? Oh, oh God, I could probably look at anchor VWAP. Right, don't forget about that. Right, it's right here in our toolbar. Right, of course, all of that measured move and all of those tools are in here as well. All the geometry tools that you might be interested in. But this objective look at where actual value is, not based on the last swing structure or some ICT bullshit pardon me, I shouldn't say that. But this is very clear and objective. I can look at this downtrend. Oh, come back here, right? So I can look at this, right, and say, okay, well, based on that, I can look where the value was. Up here, am I a little pricey up here? Again, you could draw a volume profile on this, but it's gone so far and so fast, it's just going to be, there won't be anything there until you get up here. Because this has moved so fast, right? There's no pause. This is now I've got this big fair value gap here. Market has a tendency to want to fill that in. Very well be that there are unfilled orders in here. That's a bit of the premise. Here's a 50, right? If I look at the swing structure here, if I'm coming back to half of it, I'd be right back to anchored VWAP. I've drawn anchored VWAP from here as well. So there's a lot of just additional insight into what the market is doing that's available to you just from this toolbar, without having to buy a whole bunch of indicators. Now, the market structure indicator, right? Can you do it? Highlight these without it? Yeah, you could. Some do. This is a tool, right? It's an efficiency tool to help you objectively view the market. Now, with that, oh God, how am I doing? 32. Okay, let me pause here. I'm gonna go down to the smaller time frame. Okay, so I'm over on a 2,000 tick, right? Micros. Again, it's a good week to be trading micros. There's never not a good week to be trading micros, right? But particularly with all the volatility we've had. Not a bad thought on Friday as well with the Fed announcement. So here's the announcement, right, with just vertical. Now we get up here, and all I've done is just I've used this tool here, and I've taken from the swing low to this swing high, and I've just drawn the volume profile. So again, I don't have to deal with, okay, what's coming, and do I want to factor in the overnight? I can be very precise about the volume profile that I'm drawing. So as I look at it here again, I just do the same kind of thing. Here's value, right? So I can, again, just kind of round it out. 70% of the trading volume here. The market is determined that this is where value is. Here's the point of control, right? That's the most agreed to fair price. If I get this right here, if I just draw this right here, that's where the market agrees is fair value, right? In this swing. That's the most traded price point, so we can draw some conclusions from that. When I get above value here, am I premium or discount, right? Obviously, right? It's premium. If I come down here to the low end of it, here you can see it right here, right? As we come down here, you're getting into a discount that's objective, right? I don't have to go, God, well, let's see, is it discount to this swing or is it discount to this swing? Because you could certainly look at that. Oh, come here. You could look at this. Oh, well, from this swing here to this here, and if I'm right here, well, that's still premium. Well, that's still premium. I don't want to be a buyer here. That's premium. Oh, I'm going to have to get down to 15% before I can even consider being a buyer. Obviously, I'm encouraging you to think, outside of that restriction. Here, in this swing, where is it less expensive? Where is it over relative to the market? Where's the market telling you it's expensive, and where is it telling you it's inexpensive? Here's the swing. Here's the retrace right into an order block. This is a setup that I use often, right? I particularly like the Bollinger Band. So I've just got a 21 EMA in the middle and then Bollinger Bands on either side of the Cume Delta, so I can get a look at them, which it's very, very consistent when we are, let's see if I can do it this way, when we are rallying, right? We get this push here, that'll be reflected in the delta here. Again, it's not rocket science. Here, same thing here. I get a nice push here, which would be relative to this push here. I don't know if I can get that drawn on there. This push here, right? All of this, right? So now you might look here and say, "Whoa, didn't you just say most of your trades were short on the day?" Yeah, they were. In fact, before I get off here, I'll show them to you. Most of the trades I took were shorts because of this. And then you could draw it again, right? Say, which I did. Let's get this off of here, right? So then I get a new swing here. Now let's go back to my volume profile. I'm going to work from the low through the high here. Okay, same idea, right? Here's where all the volume is. Here's where the market determines, right? As it's we've gone through price discovery, it's trying to reestablish the value area up here. When I get down here, when I'm up here, this is pricey, relatively speaking. I've also got fair value gap up here, tied to earlier price action in the week. I can come all the way back. Here's the fair value gap up here. All right, untapped. I'll get into it. So that's the confluence here. Right? So we're expensive here. Now, where is the better risk reward? I know it's a little scary. Maybe that's the word. It's a little stressful. Maybe we say it that way. God, the market is just screaming higher. How can I possibly sell this? Well, again, that's where we can come back to some objective criteria here, because thinking, God, the market's going just crazy today. The market got what it's wanted from the Fed. I can't possibly sell it. You've lost all objectivity there. That's just an emotion. Well, everybody else seems to be buying it. Where's the better risk reward? If I'm selling up here in the premium, I can be pretty tight with that stop. Right? I'm not taking a lot of risk here, but if I just go from value area high, which oh God, I'll put it on in a second. I think I took a 10 lot right here. It doesn't matter, right? I try not to make these about me. The opportunity here is I'm overvalued here relative to this swing. If I'm going to come back now, if I push it up here, all right, we could do the same thing coming the other direction. When we start to retrace here, we're doing the same thing here. Where do we get where do we find discount? Right, now note here, right, it's the same thing are happening down in the 2000 tick. I get a change of character. Let's get this out of here. I get a change of character. I get a change of character. Then I get a break of structure. Then What do we anticipate after a break of structure? Retrace. We retrace right to the 21. We're back in value. Then I get another break of structure. All right, let's open this up. Let me bring this down a bit. Another break of structure. What do I anticipate? Now, what do I know? What do I anticipate? Retrace. Now I get another break of structure. What do I anticipate? Retrace. Oh, wait, oh, that retrace goes so far, it leads to a change of character, right? So that is a little break of structure, right? That's a well, that's an internal break of structure. Now it goes for a while. But I'm still, from here, I've gone break of structure. What am I anticipating after this? Retrace. Now, three traces almost to the tick, right? It actually doesn't break that low. Again, now this is later in the day, right? Are you going to be trading in the last hour of the day on a Friday? I wouldn't suggest it, particularly on a Friday. I try and be done by 11:30 on a Friday to noon-ish at the latest, and I'm off doing videos for the other side of my business. But the point being here, am I expensive again over here? I could do the same thing. Again, this is the value of this. I guess I'm beating this pretty clearly. We're coming back here. Here's value in the downtrend. Here's the downtrend, right? When I get up here, now look at the confluence I've got here. You might think, oh God, they're going to launch this thing. They're going to launch it. End of the day, we're going to blow through this fair value gap. We're going to go get the fair value gap above, and all of that's happening. But now look below. If that was going to be happening, you would anticipate some aggressive buyers up there. We get quite the contrary, right? We get more aggressive selling. Again, we're end of the week, right? It's not a great time to be trading, but the objectivity of what this is giving us here is reflected very clearly. This is premium here. This is discount. Okay, right, so you look here. We come down. We go into premium. Then we come down into discount. Discount being we're outside of the fair value area. We're at a discount. We do not sweep this low, shockingly. And we get a retrace. We're back into value. Well, Mike, again, I would not suggest you're trading here. But the idea being that you've got just an unbelievable set of tools here that are, I think, again, staying with my theme, are really underappreciated. So you don't need to buy a volume profile indicator unless, I'm not saying don't buy it. I'm just saying in addition to that, you've got this right here for a swing-by-swing analysis of this. I could do the same thing again here, not to beat a dead horse, but here I got it again. Where's value? Where's inexpensive? What's Delta doing? Let me one last thing. Final comment, right? Again, I can't not show this, right? This is the dominant algo. It's God knows there's probably 20,000 algos in there. Who knows how many algos in here? This is the one that we can track. So you can see now. Can I combine a little bit of this premium discount into recognizing where the measured move algo is going to be active? Now again, remember once we got up here. Oh, here I've got them all on here. Well, now this you wouldn't have necessarily caught this, right? Because it's right pre-launch. But note, it comes right out of a measured move, and then we just blow. Here's the first target, right? We blow through all of this. Now we get into this chop here. There are some areas here where if you were just a little bit unsure, this can give you a little bit more conviction because we can use the other side of the 65, or you can use the 707 or 786, whatever you prefer. But you can see how some of these are really right where you're like, God, boy, right at the point of control. So oh, come here. This looks pretty interesting here. So I'm coming right back to the point of control. I'm at the 50. I'm at the POC. Now, is it just short it blindly there? No, but as we start to come back under, here's the 21 EMA. As we start coming back here, now suppose you missed this one. Like, oh, there's the breakup structure. Damn, I missed that one. Oh shit, maybe I'll get that one. Back to the 21. Was there one here? It doesn't look like it went far enough. So here's another break of structure. So this is where don't fret if you miss one. Here's the next break of structure. It's right here, break of structure. Now when I come back, I'm back into value here. I come right into value here, and there's the golden zone. Here's the target. I come screaming up here, back down. Uh-oh, I'm not sure. Geez, maybe it'll retrace 50 target. Back to the low, 50. You're not going to be trading right there. But I could take this from the 2,000 to the 5 minute to the 15 minute. Same thing again. Now, can we layer these things together to make better decisions? That's ultimately what I'm hoping that we get to. After watching this video, 42 minutes, I probably went very long, but for those of you that stuck around and watched, again, just a reminder, all of these tools, all of our tools are available for trial, and we do have this little flash sale that's going to be going on this Friday here. This is available only to our discount members, or excuse me, to our Discord members. So this will be a one-day only. It's only on Friday the 29th. We're going to do 40% off everything, all of our indicators with very few exceptions, with the exception of, you see up here, except for the ASP bundles, the ASP and the bundles. So the footprint and the footprint auto trader is a bundle. Those will not be available for the 40% discount. But literally every, we have 75 indicators. All the others will be available for that discount, right? So something like our toolbar, which I just showed you, our market structure indicator, our measured move indicator, all of that will be available at 40% off just for that one day, and you have to be a member of our Discord. If you're not in our Discord, the links are directly below. They're on our website. It's hard to miss, right? It's totally free to jump in the Discord, right? So might as well get in. Take advantage of this if you're not in already. Okay, with that, I'll wish you guys a good day, and we'll catch you next week.